My name is Michael Schneiders. I'm the CFO of BRAIN Biotech AG, and I'd like to take a journey with you today to explore a bit more in detail our 3M results and what BRAIN Biotech is all about. Well, BRAIN takes all its inspiration from nature. So what we do is we provide biological solutions for industrial problems based on microorganisms. So everything we do is based on microorganisms, mostly then in enzyme products, and we essentially try to make it more sustainable to do industrial processes. In a nutshell, about 55 million revenues last year, about 400,000 adjusted EBITDA, and an equity ratio of 32%. We are clearly not the one product company, but we have more than 600 specialty products already into the market, solely as a B2B provider. We have more than 40 active patent families in the market, and more than 200 industrial partnerships successfully concluded on our industrial research on our TMS business. About 310 employees in the group, more than 30 years of experience, and listed as a prime standard in Frankfurt since 2016. On the left-hand side, bioproducts. Here we produce mostly enzymes, about 42 million of revenues, about 13% adjusted EBITDA, and now jointly operating under the brand of Biocatalyst. In the middle, bioscience, fueling both the bioproducts business and the bioincubator, is our real science operation here, where we sell tailor-made solutions business to our customers, but also do our own research. About 12 million of revenues, about 6% adjusted EBITDA margin, plus upside through milestone and royalty payments. And on the right-hand side is our bioincubator, where we have the most promising products we develop ourselves in the group, particularly in the arenas of, for example, of strain development, of pharmaceutical products, but also a lot of products which go into the industries, for example, of food and beverage. So how do we do it? Well, first of all, we look at nature and try to discover new proteins out there in nature or new enzymes out there in nature who can make use for industrial processes. Once we find them, we need to produce them. And production means fermentation, and fermentation is done on microbial strains. So think about things like a baker yeast or, for example, a bacillus strain. Then we need to bring essentially this protein we have found in nature into the microbial strain. That's called expression technology. We develop a strain essentially to make it more productive. We develop then a whole bioprocess around it in the biofactory to bring it in a steel fermenter and then produce the final product, formulate, blend it, and market it out to our customers. And what you will widely see is that we are fully integrated across the value chain, so starting in our science business, in our incubator business, to the products business, to a final product and for our end customer. We had actually quite a strong start to the year in our bioscience business, especially driven by our daughter company, Analytical Discovery on the pharma side, but also here in Zwingenberg, where I'm presenting from today, we're seeing a pretty good order backlog for the year. Our product segment had a bit of a weaker start to the year as we were essentially commissioning a second large-scale fermenter with some teething problems. But two of our daughter companies, Biotech, who is more on the fat improver side, performed extremely well, and also Biotech, who is more on the food ingredient side, has had very good momentum. One of our interesting projects, essentially Braziin, which is a natural sweetener as a replacement essentially for sugar. We have now partnered with a new exclusive partner. Unfortunately, we cannot disclose it yet, but I'm pretty sure we could do it in the course of the next month. Let me jump a bit more in detail on our numbers. So in total, we have started the year with a revenue minus of 7%, but a very strong performance in our bioscience business, so 13.5% growth, a weaker start in our bioproduct segment. This is nothing to worry about. Our quarters are a bit volatile, and we do think that we can have a lot of strong momentum in the next quarters to come, so that we're actually guiding positive growth for the whole group for both segments for the year. Given our weaker sales coverage, actually the EBITDA has been holding up reasonably well, adjusted EBITDA slightly down from last year's event. And essentially, we have been very strong here on cost control across the group. Acrivion Genomics, that's our genome engineering technology within the bioincubator, we have invested 0.8 million compared to 0.7 million of last year. If you look at our adjusted EBITDA, you can clearly see that bioscience had a fantastic first quarter. The bioproduct was weaker, mainly due to weaker sales in that quarter, but also to some of the teething problems with the start of our second large-scale fermenter. Holding costs are roughly stable, and also bioincubator costs have been roughly stable here on the quarter. Jumping to our cash flow situation quite stable on the last quarter, so around 5 million cash into the pocket. We will also ask our shareholders on the AGM on March 12th to approve another 5 million of silent participation by Hessen Capital, which is a state-owned bank, which is essentially giving innovation capital to highly innovative companies within the state. We also advanced negotiations for additional credit lines on the holding level. We're looking to further refinance on the bioproduct level. And also we have some other things planned basically beyond 23-24 to further improve our cash position. With this measures in place, I would say we are adequately financed. Now let me come to our guidance. We have given today our quantitative guidance. We are now looking at group sales of 58 to 62 million for the full year, which would equate to a growth of 5 to 12% for the full year, expecting both divisions to contribute. On the adjusted EBITDA, we expect percentage-wise to grow at least as strongly as with sales. And for Caribbean Genomics, our main investments are supposed to be flat year on year, which is also true for CapEx around 3 to 4 million, which is roughly flat on last year. Important to notice, this guidance does not include any major milestones, and indeed we could expect one major milestone out of our pharma programs for this year, which then of course would come on top of our current guidance. Our midterm targets remain unchanged, so we're still planning for the base year of 23 to double our revenues to about 100 million, so about 15% CAGR per year, and to essentially go to very strong positive EBITDA of a midpoint margin of 15%. As an innovative company, about 30% of our sales will then come from new products. The next reporting will be essentially here the half-year statement on May the 28th, but please feel also free to join us at our AGM, which is going to be a physical AGM taking place very close to our headquarters here in Zwingenberg on March the 12th. If you have any further questions, please do not shy away to call me directly or contact Martina Schuster from Investor Relations. We're quite happy to answer all of your questions. Thank you very much.